Hello and welcome to this November 3rd, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Taking a look at the stock today, we are looking at Texas Roadhouse. This is ticker symbol TXRH. This is about a $1.1 billion consumer discretionary company. Technically, you can see obviously the April high that we had achieved just a little bit above $16 was threatened on Tuesday. We actually moved up, tried to break through, and did break through on an intraday basis, but then failed and came back down, closing near the low of the day, and this all occurred with increasing volume. So it doesn't necessarily mean that the run is over to the upside. In fact, we don't believe that's the case, but it does indicate that the risk of lower prices in the near term is a reality. So we would be in a position maybe to take advantage of that. The 20-day moving average, you can see that there's been some pretty good price support between 15 and 15 and a quarter. You've got gap support right around 15. So this whole area is a pretty decent support area, and you've got the 20-day sitting at 15.24. So the first entry down around the 15 and a quarter level would make sense. Second entry down at the bottom of this gap support, which is almost sitting right on the 50-day moving average, down closer to 14.50, would be a second entry. So if the stock does show some additional weakness here in the near term, and it does make it all the way back down to 14.50, you can get into an average at about 14.85 between these two entry points, and I think that would be a pretty nice entry level for TXRH. You can't see it from this chart because it's only an 8-month chart, but this is a stock that's been in an uptrend since the March 2009 lows, and this pattern really would qualify as a cup with handle pattern, where we just recently, yesterday, put in the top of this cup on the right side, and now this weakness that we see, if we do get it, could qualify here for a handle back to the 20-day, possibly even a little bit lower. So I think the stock looks pretty interesting going forward. The volume trends here definitely have strengthened over the course of the last 3 or 4 months. You can see back in early August, volume started coming in on the move through the 50-day moving average. After pulling back on lesser volume, we started to make another run to the upside, and right here you can see multiple tops at around 14.75, and we gapped up to take out that resistance, and you can see the volume was very strong on this move up as well. So I think outside of a the short-term bearish implication of this black candle and false breakout, I do think further down the road Texas Roadhouse could do quite well. Measurement on an ultimate breakout above about 1610, 1620 on a closing basis with confirming volume, that measurement would be from about this $12 bottom up to about 16 and a quarter. So you figure you can tack on about $4.25 on the breakout. That would take you up to about the $20.50 range. So TXRH looks pretty good here. Again, short term, we might see a little bit of a pullback. I'd use that to my advantage. Line in the sand to the downside, you might want to consider right around this 14.50 area. If we lose the 20-day, we lose this price support. We lose the 50-day, we lose gap support. Obviously, the stock may have some more issues than what it appears at this point. So keep that in mind to the downside. But ultimately, after a pullback, we'd look for a breakout confirming volume, and then ultimately that measurement perhaps up to about $20.50. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.